Hey, welcome everyone to the first episode of Taxes of Certified Taxes. My name is Kevin. I'm the owner of Certified Taxes. I'm here to bring knowledge to the tax code if you're personal or business taxes, educate you, give you quality knowledge you need to be successful, to be comfortable with taxes, and not to fear with the IRS if an audit comes, or if you need to deal with any kind of taxes. I'm here to bring you knowledge to really be confident that you can deal with it on your own or with your tax professional. For the first series, I'm going to talk about self-employment. We're going to go about different entities, business structures, how to pay yourself, and how you're taxed as a business owner.
And I'm your co-host, MP, the host of the actual Latin Wealth Club podcast, Beat the Sun podcast, and the Bull Room. Behind the scenes, we have
AZ.
And, you heard it here first, guys. We have Kevin from Certified Taxes. We're going to touch on various different topics when it comes to the tax code. We're going to educate our community so that way we can become better. We can become a little bit more financially literate, mostly when it comes to the tax code. And that way we don't fear the enemies, the IRS, because we don't like paying them, guys. So with that being said, Kevin, what is your first topic, man?
All right, the first topic we're going to talk about is business structures or entities. I get a lot of questions with new business owners or existing business owners is how should they structure their business? What entities should they choose? There's a lot of variables that go into to deciding what option should be. So the first one we're going to go through is a sole proprietorship, which also could be like a DBA. That's if you're first starting, maybe a service base, you're a barber, clothing brand. You do marketing like Instagram, something small you want to start off with. Also, just very little capital, maybe for the year, maybe 5,000 net profits for the year. This would be a good way to start to use. You could kind of get going. Not much fees going into it. You kind of go right away, kind of run into it.
A DBA is more of like a label, though, right? If I'm not mistaken.
Yeah, you can do your personal name or doing business as. So you can use your personal name. If you have a business name, it's fine. But a lot of people just use DBA or use their personal name because they don't really have a business name yet. They kind of just want to see what happens. Yeah. So that's kind of a good way to treat it.
But if you do have a business name, that's what a DBA is used for, right? DBA actually stands for doing business as, right? So you're actually a self-employed person, a 1099, but because you have a DBA, let's say I'm an auto detailer. I'm just starting out. I'm not making enough for an LLC per se, but I'm making enough for a DBA.
Exactly.
Right?
Yeah. And also, too, with the DBA, you can also open up a business bank account. And when people come to me with questions, my first question is I ask them, do you have a business bank account? I feel that's the most important thing because a lot of people, sometimes they don't, sometimes they do. I feel it's very important because it's pretty much, you kind of have to have a business bank account because you separate your personal and business, transactions. You don't want to keep all one bank account. That's when things get kind of messy, things get messed up. And the IRS sees that. They're not going to like that. There's going to be a big audit. So most of the times they won't allow you to deduct any kind of expenses because they're going to say, no, all this is for personal. So it's very important to have a business and a personal bank account. Talking about expenses, there are times when personal expenses could be categorized as a business. We'll make another video about that to get more into details, but also keep that in mind to kind of how to structure that way and kind of manipulate how personal expense could become an actual business expense.
Okay, Kevin. So a DBA is mainly used for when you're a 1099, like I said, and you just want to be doing business as under a different name, right? Exactly. And you could also open a bank account, right? Which is, like you said, it's important. Now, I have an LLC, right? What's the difference between a DBA and an LLC? And then can you talk about an LLC?
Yeah, so an LLC kind of gives you more layer of a protection. Separates your personal assets with your business assets. So let's say any kind of legal action you can sue, they can only go after your business assets and not your personal. So you're still protected. It's still good to have some kind of business insurance just to add an extra layer. So the LLC, this is when your business starts to grow in revenue. You start to get more clients. You want to be able to protect yourself. Also, the way business, a DBA and LLC, you still record your revenue the same. You still record your expenses as the same. Just the main topics for the LLC is that you're protected from your business personal assets. So, like I said, if you're starting to grow a little bit, your revenue is starting to increase, you're getting more clients, you want to be able to make sure that you're protected, and in case anything happens, that you make sure your business is
taken. Yeah. So it's pretty much saying, like, if you mess up, if I'm an auto detailer, right, and I'm doing over $100,000 a year, right, and I somehow mess up someone's car. Right. And that person is very angry at me, doesn't want to work with me, and ends up trying to sue me. So when they try to sue me, right, they can only sue the LLC. They can't sue me personally, right? So if I personally have $1 million in the bank, right, and my business only has $20,000 in the bank, that means that person could only sue for $20,000, right? Whatever the LLC has. If I have $1 million, they can't touch anything.
Exactly.
Because the LLC is its own entity, right? Yeah. That's what I have an understanding of. Okay.
Yeah, exactly what it is.
Okay. Now, I know with my the way I'm structured, I have like this S-Corp type of thing to my LLC. Can you talk about what a S-Corp is?
Yeah, so S-Corp is still an LLC. Real quick about LLC, the fees are a little bit higher. You do pay an $800 annual tax fee to the state of California. So an S-Corp is still an LLC. It's just you're taxed differently. You're taxed as an S-Corp. And what that means is that you become an employee of your business. You know, it eliminates the self-employment taxes from a sole proprietorship LLC. You get that self-employment tax. So S-Corp eliminates that. You put yourself on payroll. You pay payroll taxes, and you pay yourself as a regular employee. That could save you right there alone, saves you a lot in taxes because, obviously, like I said, you're not paying that 15% of self-employment taxes. Now, you're just paying payroll taxes. You deduct that from your books. And could save you a lot in taxes, like I said, and decreases your net profit. But still, your cash flow is still there. So that's a very good route to take, but you have to make sure your business is in the right spot to take it. There are a lot of times people come to me as my business. I heard about S-Corp. What is that? Can my business do it? It's a great option, but maybe your business is not ready yet. Also, I hear a lot of times, someone told me to start off as an S-Corp. Sometimes that could kind of hurt your business because of the expenses that come along with it. Yes, it does save you on taxes, but if your business is not ready, it could potentially hurt your business and could kind of mess up with your cash flow. So it's good to kind of make sure you talk to someone. You could talk to me about, making sure my business is ready for that, because once your business reaches at the 40, 50K net range, that's when it becomes a good idea to do it. So it's not good to jump right into it. If you're ready to do it, that's great. But, it's good to kind of wait to make sure your business is kind of set up and ready for that.
Pretty much, guys, if you're not making full-time income off your business, an S-Corp is not the way to go. That is in better words, right, Kevin?
Exactly, yeah. So you can make sure the revenue's there. It all goes back to cash flow. Can I afford the S-Corp, the fees, payroll taxes? If yes, then it's a great benefit. Like I said, if you have questions about this, we can obviously go more details about this, about your personal situation with your business, kind of tailored to you. But this is a great option to save on taxes. Like, how can I save on taxes? Well, how's your business structure set up? And then we kind of go from there. So
that you could actually avoid that California $800 fee by starting an LLC in a different state.
That's true, yeah.
And we could actually talk. Let's talk about that at the end, because that's actually a little loophole that I found, and I'm actually starting my own quote unquote home residence in Texas.
Yeah, that would be a good topic talking about.
Yeah, we'll talk about that a little bit right now at the end. Because have you heard about that?
Yeah,
that people doing that.
Yeah, people do that.
Yeah.
So yeah,
I'm kind of upset you didn't tell me how to find out myself, right? Kevin. What's up with that, man?
Sometimes you gotta think a little bit for yourself, right?
Man, you gotta help me out. You're my CPA and accountant, bro.
I think
you're supposed to give me the game plan, dog.
No, I want you to gotta do your homework. Your own homework.
Yeah, I'm like, I even told my parents, like, don't be surprised if you see Texas plates on my car. And they're like, what the hell? What do you mean? I'm like,
don't worry about it.
Don't worry about it. Business. Anyways, Kevin, so when it comes to DBA, when it comes to LLC, when it comes to an S-Corp, how is it that you actually pay yourself? Like, I mean, you're telling me that I need to start a bank account, a business bank account, and have a personal bank account. Can I just transfer the funds, or how does that work?
Technically, yes. So a DBA, sole proprietorship, or LLC, you pay yourself the same. You can just take an owner's draw whenever you want. It could be monthly, weekly, just depends on when you need the cash. But keep in mind, this is not an expense to your business. It only reduces your equity, which is on your balance sheet. So let's say you make $10,000, you take $10,000 out of your business. It's not an expense. You're still going to pay that $10,000 of self-employment taxes. And
in better words, you're robbing your own business.
Yes,
essentially, yes. You're just taking out. So if your business is making $10K a month and you're taking out a $2K, it's like a robbery. So a robber went into your business and took $2K. That's pretty much what it means. I mean, to your business, not to you, but to your business. Because at the end of it, guess who's paying the tax on that? Your business, not you.
So you don't get the benefit of an expense, and you're still paying taxes on that. So something to think about. You could write yourself a check. You could, like I said, transfer from one business or your personal to your business. That's totally fine. Just make sure you document it. Make sure it's on your books so you could see, how much you took from yourself, how much you took from your business. Because at the end of the day, it's going to go on. We need to file it with your business taxes when that comes.
See, even the terms are correct about that. You robbing your own business said what you took from your business.
Yeah, exactly.
Now, when it comes to an S-Corp, I know it's a little different. And it was hard for me to understand when we went to S-Corp, right? Because I was like, dude, am I actually paying more? What the hell, Kevin? What's going on? Right. Now, I know for a lot of people, they get told, you need to start with an S-Corp. And you know why I think that is because it's someone like me. Right, that didn't know, that was more of a sole proprietor and then found out about the S-Corp and was like, I should have done this a long time ago. Right. So then we accidentally misinform other people, right? Not myself personally, but I've seen that, before. Now, when it actually comes to an S-Corp and you're actually making the significant revenue that it takes to open an S-Corp, how do you actually pay yourself, man? And can you explain that? Because it actually, it's actually adds to your expenses, right? But it defers it in your tax, right?
Yeah. So that's kind of the kind of payoff where you get. So I'll explain how do you pay yourself. So like I said, you're on payroll, regular payroll schedule. So every two weeks, once a month, depending on you decide that frequency. So it doesn't really matter. Also, too, you got to set up a reasonable salary for yourself, a reasonable compensation. So you just look in the industry wherever your business is and kind of compare and contrast. Kind of getting similar salary to that industry, and that's much you pay yourself. So again, you could deduct that from your books, all the expenses, and now, like you said, well, now I have more expenses. True, and when you have high revenue, or a business that have high revenue, you're trying to look for things. How can I increase my expenses? I don't just want to buy random stuff because that really doesn't benefit you. And in fact, an S-Corp does okay. Well, at least I'm going to pay myself. I pay payroll taxes. I deduct my salary. That's what increases your expenses. And like I said, decreases your net profit. So at the end of the day, you're going to save a lot on paying less taxes because you're decreasing your net profit, your bottom line.
Okay. So, I mean, it essentially what the difference is from an S-Corp DBA to an a DBA LLC to an S-Corp is that from an LLC and a DBA, you're taking money. Right. And from an S-Corp, you're actually paying yourself and you're paying taxes with yourself and with the business. And then now that becomes a tax write-off to your business, right?
Yeah.
And it becomes an actual pay stub to you.
Yeah.
Now you actually have employment.
Okay. Yeah.
Right? So now it's like the McDonald's worker that gets if he goes to a dealership, all he has to do is show a McDonald's check. And if they approve him, they approve him, right? What people don't understand is that when you're self-employed, do you know how difficult it is to get loans? Do you know how difficult it is to go buy a car? I had to wait 2 damn years and create 2 damn years of tax returns in order to get my detailing van back in 2020.
Yeah, because it's very hard as a...
Not only that, but you have to show a profit. So if you're showing a loss, you're even more effed.
Exactly, yeah.
Right? So in order for you to grow your business, right, this is why they say first 2 to 3 years are not going to make any money. Those are your building years, right? Those are the years that you're supposed to just reinvest everything, grow that capital. So once you do get that revenue, you do reach that S-Corp level, right? Now, when you're actually paying yourself, it becomes a benefit to your business and to yourself.
Exactly.
Now it makes your life easier. Now you could go get a mortgage. Now you could go buy a car. But all these self-made bosses, right? Because I was one of those. I was guilty of this. Thinking, I know what I'm doing with just doing self-employed. Right, but little did I know, I couldn't even go buy a damn car. Right? Yeah. I'm making all this money, but I can't even go finance a car if I wanted to. Right. Because I'm not doing it properly. And this is why we're doing this Taxes with Certified Taxes, is to actually educate you on this. Now, with that being said, Kevin, what's actually the difference between a DBA LLC S-Corp when it actually comes to tax time? When it comes to taxes, what's the difference?
Somewhere like I said, when you pay yourself sole proprietorship, DBA LLC, you're taxed the same. With that, you tax all your profit and loss transfers over to your personal taxes. So you're going to file that together. That goes on to Schedule C. What Schedule C is, you report all your gross revenue, all your expenses, and the net profit of that. You pay self-employment taxes. So if you have W-2 and also a small business, so you're going to pay taxes on your W-2 wages. You can pay that self-employment tax 50% on your net profit, and you file that all together. With an S-Corp, it's a little different. With the S-Corp, you file 1120S, so you file that separately. The same thing, all your gross revenue, your expenses, any kind of depreciation, anything that's on your balance sheet, you file that with your 1120S. And from there, that net profit or loss goes on K1, and that K1 files with your personal tax return. So, yeah, you're still going to file with your personal tax return, but you're not paying that 15% of taxes on top of you would like an LLC. So it's still filed with your personal taxes, but it's separate, and you only get taxed on your ordinary taxes and not the self-employment taxes.
Now let's talk about the bonus round, the bonus information.
Okay,
because we're already saving 15% going S-Corp once we're making the revenue necessary, right?
Yeah.
Now, transferring my business from California to Texas with a mailbox. Yes, a mailbox, guys. You could get a mailbox and make it your home or business residence. Now, if I transfer my business, I'm already, all right. So just by going from DBA to LLC to S-Corp, I'm saving 15%, right?
Yeah, from LLC to S-Corp.
All right, I'm already saving 15% tax. How much more tax can I save by opening a home mailbox residence in Texas and transferring my business out there?
Well, it kind of depends what state you're going to move to. So
let's say Texas, right? I think California and Texas, I think those are like the two major ones that people move from.
Yeah.
So how much more can I save by actually moving my business from California to Texas?
So the first one, like you mentioned, is so California, you pay the $800 federal tax, no matter what kind of income you make. If you make a loss or profit, it's still $800 annual.
Yeah.
Obviously, like you said with Texas, obviously you could avoid that. So
you whatever their fee is, which is obviously going to be sustainably lower.
Yeah.
Right. We don't know how much we don't know the actual number, but you're going to save a lot of money. Yeah. But on the actual taxes, right? Because I know that over there they don't have income tax.
Right.
So you personally are already going to save a lot of money, right?
Exactly.
Now, if my business is in Texas, I'm already saving these taxes, right? And I pay myself living in California. Do I pay California taxes or do I still pay Texas taxes?
So technically, you're paying wherever you your residence. So if you're a resident in Texas, you could pay the Texas taxes.
But you can live in California.
Yeah.
While supposedly living in Texas, right?
Yeah.
So that's the bonus round, guys. That is the bonus information. Is if you guys really want to live in California but not pay California, open a mailbox.
That's why to the tax code, like we say, you got to learn the tax code. There's so much. So I heard it's true. The tax code is that it's so thick that you can't. If you shoot a gun, you really want to go through. That's how thick tax code is.
Let's go try it, bro. Bring it over, bro.
I haven't seen it, but I've heard.
All I gotta say is, we don't know this. A lot of people don't know this in our community, and I'm thankful that we are learning this and that we are sharing this knowledge.
Yeah.
But with that being said, man, is this the end of the podcast?
So this is the end of this first series. Again, so all this stuff, make sure you talk to an accountant, somebody who knows what they're doing. It's very important to make sure all this is done correctly. Mario's very smart. He's a smart guy. He knows his business very well. But when we come to this, he have some questions that, if he did this on his own, as far as his own business, he might have made a mistake here and there. So it's very important to speak to an accountant that knows what they're doing, make sure they have the best benefit for your business. So if you want to get in contact with me, go to certifiedtaxesllc.com. Schedule an appointment. You can message me on Instagram, Certified Taxes. To get more details, we could go set up a one-on-one meeting, consultation, kind of go over your business taxes in detail, go over your business structure and how you want to operate and how you should, and kind of plan for the future, more strategy. So feel free to leave me comments. I'll be happy to answer them whenever they come. Quick question, Kevin. Are you still in the off season? Are you still putting in that work in the off season? Yeah. So technically until the end of October is where until my off season. November, December is when I start preparing for January everything. For 2024. So still kind of technically my off season to still do my research. Yeah. There's still updates coming, so I'm still doing my own updates, doing my own reading. So updates come until like literally the end of December. So I'm still on the lookout for whatever new tax code comes out, what changes. So yeah, pretty much still in my off season until. Sounds good, man. So all money and no money out. Stay dedicated, stay motivated, and we'll see you on the next one, Line of Wealth Club.